I suffered my worst losses ever in March of 2020. I had been actively trading options since 2013, and with 7 years worth of battle scars and sweet victories, I felt confident enough to increase my trade sizes. And almost as if by design, the market volatility that came with COVID-19 lockdown punched a $60,000 loss straight in my gut. Okay, hold up. I said $60,000 loss, not 700,000. You see, the 700,000 loss I was referring to in the title showed up in 20-year-old trader Alex Kearns' brokerage account, who then tragically took his own life. He had an account of only 16,000, but a 700,000 negative balance temporarily showed up, likely due to misaligned settlement times. He didn't actually lose $700,000, he just thought he did, after seeing the negative balance that morning. This is a critical piece of information I hope you keep in mind throughout this video. So why then did I start off by talking about my own trading losses? Because I'd like to use my own trading losses as a side-by-side comparison to Alex's account, to help you see with actual figures how difficult it is to lose $700,000 with a small $16 account. Take a look and you'll see what I mean. My trading positions were bigger both in size and exposure, the percentage moves in the underlying that I experienced were much bigger, and my account size is also much bigger than his. And despite all those 3 points, my losses were only a fraction of $700,000. So all you fear-mongering, you gonna lose your house critics, stop it. Get your facts right. Let me dive into my positions in March so you have an idea of how far off the mark these critics are. Number 1. My positions were likely far bigger than Alex's. For the past couple of years, I've constantly had option strangle positions in 5 different futures. These were crude oil, gold, natural gas, Euro FX, and soybeans. To make matters worse, my successful ROI last year gave me the confidence to increase the delta of my strangles from 17 delta to 30 delta, which basically means I increase my profit potential in exchange for accelerated losses if the underlying makes big moves. Well, unfortunately for me, the month of March was one of those periods where multiple global events aligned to kick the crap out of me. Over the weekend of 8th of March in 2020, an ugly price war in crude oil erupted, sending crude oil prices plunging as much as 30%. In the next couple of days, gold prices tumbled 11%. My option strangles saw losses mount quickly as the higher delta accelerated the pain. By the end of March, I was looking at a painful $60,000 loss. Let's take another look at what I just described. I had 5 highly leveraged positions, all of which were exposed to unlimited losses. The total notional value of my positions add up to over $400,000, and I had the leverage to put on these trades because I was trading options on futures. Futures have much higher leverage than Alex's equity options position. I was able to take on these large positions while he couldn't. His brokerage simply does not allow him to take on that level of risk that I can take. Hence, my account definitely had much higher exposure than his. There is no question about that. I had hit $60,000 in losses drawn out over a month. Thus, for Alex to have $700,000 loss overnight is simply absurd. Number 2. My positions experienced much bigger moves than his. Based on the timing of events leading up to his suicide, there was one particular day that stood out. 11th of June 2020 saw the equity markets drop over 5%. The exact underlying he was trading was not disclosed, but to have one options leg worth $700,000 in an options strategy, it probably would have been a big product like XPX or Amazon. Remember, he did not lose $700,000. Neither was he exposed to it. He couldn't possibly have placed such a big position in the first place. A 5% drop in the equity markets isn't common and is big enough to make news, but compare that to commodity futures and a 5% move would barely register. The crude oil strangle I had on saw a 30% move in crude oil futures, leaving a gap down so large a train could run through it. Despite that, once again my losses were nowhere close to Alex's $700,000. Number 3. My account size is much bigger than his. Alex had a small $16,000 account, which would have meant he could only open positions up to around $32,000 in exposure. The brokerage would have stopped him from slapping on any more positions or forced him to top up or close out his positions. On the other hand, I have a 6-figure account, on top of which I apply leverage using futures products. When you consider my $60,000 loss as a proportion of my account size, you would see that it is within the normal range of profits and losses. As options trading is no doubt risky, having profits and losses up to 30% of the account size isn't out of the ordinary. Put this piece of information together with my large position sizes with unlimited losses and huge moves in the underlying in March 2020, something becomes quite clear. It is difficult, ridiculous, if not downright impossible, to lose $700,000 on a $16,000 account like Alex's. Like I mentioned in my previous video, I hypothesized that he had a vertical spread that he held on to past expiration. The vertical spread would have limited his losses to within acceptable limits for his account size, which was how he was allowed to put the position on in the first place. His maximum loss was predefined and safely within account limits, but options expiry settlements may have misaligned timings over the weekend. Look, the point of this video is simple. Stop saying that options trading caused a 700,000 loss in a 16,000 account. It didn't. I hope that by showing you the numbers from the losses I experienced in March 2020, everyone would be better equipped with the facts to dismiss the fear mongers. For folks who are interested to pick up options trading but are now fearful because of Alex's death, I want to tell you this. Options trading is not a walk in the park, but it's also not a death trap. If doing value investing in stocks can be compared to driving leisurely at 70 km per hour, then options trading would mean driving near the speed limit of 110 km per hour. It's faster, it's more dangerous, it's more exciting, but for goodness sakes, it's not driving at 10,000 km per hour like some would have you believe.